Greetings, Dr. Jeffrey Scott, and this is my Market MRI Pro market update for Thursday, February 20th, 2025. My email address is marketmripro@gmail.com. If you're new to the channel, hit the subscribe and the alarm, and you'll get notifications. If you have comments, positive or negative, even negative are welcome, and especially if they're constructive, email me or put them in the remarks section, and I will take a look at them. I apologize for the audio quality of yesterday's video. Funny thing, I'm using my best setup for on the road, and I just switched again today. We'll see how this one sounds, if it sounds any better. Interesting day in the market, wasn't it? Before we go further, this session's for educational purposes only. Anything I recommend should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You and your owner are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. I have tools for multiple platforms, but I would consider myself an independent trader. And for example, I have a great scanner and tools and wealth charts, soon to be launched in Metastock. I have a unique trading app in TradeStation and my indicators, and I have tools in TradingView. But what we're going to look at tonight is my newest product, one that will be launched in the next week or two, and it's called Market MRI Pro. Now, what's even better than clicking subscribe, which you should do anyways, join my top-down trader group. It's free. I don't use it to solicit. I use it as a vehicle to communicate my thoughts on the market and pretty close to nightly videos. And then I've had one-off educational programs that I've done for members, and we have built a number of beta testers that came out of the group. So if you're interested, just go to Google Groups, click All Groups, search for Top Down Trader, sign up, and I'll let you in. I usually go to the Google Groups once a day to add the new members and post some comments. And those that are already members, I look forward to your comments. Every time I get one, I get excited because we all want to learn from each other. Taking a look at the Leaders Index, something that I do for the Top Down Trader Group. This is a group of powerful stocks that I put together November 24th with the expectation that when this thing breaks down, it's over and the market is over. Well, early in the day, it looked like the market was over. It pulled right down to this green line, which is the chandelier stop, but like the market, it recovered and closed on the 17. So I would say down, but not out. I'm not ready to call it. So I'm not ready to say that this rally is over. It's certainly a rally under pressure, and having a cash position and taking some profits as we go into Friday's options expiration is certainly not a problem in my book. If we go and we look at the timing model, we got teased, and I called out that it doesn't really count until, let me just adjust this 1 second. The tease that I made was it doesn't count until the market is done for the day. And what doesn't count is we saw a flip of the spider to a buy signal. But with the market selling off on Thursday, the bongos went back to red. So we're still weekly on a sell on the spiders. One I'm not real comfortable with because we just barely triggered the sell and then we reversed. We're a sell on the Russell, but we are still in a buy mode on the Qs and the diamonds. If I look at the daily, I feel a little bit better as we are in a buy mode on the spider and the Qs, but look at this. We finally flipped to a sell on the daily on the diamonds and the Russell. So we're 2 and 2 on both daily and weekly. I would say that is kind of a definition of chop. There we go. Now, let's take a look at the rest of what happened on Thursday. Let's take a look at the US indexes. So what we can see here is we are in an uptrend. We've had higher highs, we've had higher lows, and if you look at the action on Thursday, yeah, the spiders were down 0.42, a significant tail and a bounce. Still above the 17. Here is the 50 and the 200. I don't think we broke down. We down 0.42. As long as this trend line is holding, we're still in an uptrend, and I'm still long more than I'm short. I have cash. I'm less invested than I normally am because I am concerned about the market, but I don't think we broke the bullish posture here. If I look at the next one would be the Qs. Let's blow this up higher. This is a new part of the tool that beta testers will get pushed to them tonight. Double tops. And a lot of people say you sell double tops. So is there a surprise that we had a down session on Thursday? No, down 0.42 on the Qs, still above the 17, the 50, and 200. If the 50 is at 523 and we closed at 537, we're less than 3% away from the 50. So if I have a high road scenarios, we break out above the 50 and we go to new highs, not above the 50, but above the double top. My medium scenario is a 3% pullback to the 50 and a bounce. If we went back to the 200, that would be a really big pullback. So maybe for about 500, which is about 6 or 7%, would be my low road scenario. But right now, yeah, I'm concerned about the failure at the double top. It would not surprise me to see this come in a bit. If we look at the diamonds, let's expand those. Diamonds are in a new downtrend here. And as we see here, the diamonds were down 0.96%. Right now, I expect a pullback to the 50. The next place is probably in this 420 range. And 420 from 442 is just 5%. How impossible would it be to pull back to this level here? That's been support multiple times. So a little bit of short-term concern on these markets. All of them are a little bit different, and the Russell is different as well. This one is stuck in between the 50 and the 200. I see nothing that gets me excited as a bull on this right now. Again, it's below the 50, down 0.96, and would not surprise me at all to come back and test that 200. So each of the major indices had a negative session. None of them were down 1%. And you know, my expectations are this is not a massive pullback. It would not surprise me to see us dwindle down to the next level on each of these. You'd expect with a market under pressure, as we saw on Thursday, the VIX would rally, but not really. The VIX had a doji and was up only 2.69% and did not get above that 50. So not very impressive on the VIX. And the US dollar, looking at the UUP ETF, a breakdown down another 0.79 and taking out a place that I thought it might, and it still might jump from, which is the 200-day moving average. If we look at the commodities, here they are. The commodities, gold, all-time highs, I believe. And the market on Thursday was up just a bit. Silver now in an uptrend, not as big of a move yet as gold, but silver on the session was up 0.43. Oil has pulled down to support and bounced. Natural gas had a easing day on the 20th. And if we look at the 10-year, we can see the 10-year was down again, down 0.72. And if we look at the 30-year, sitting right on that 50 was down 0.32. So was this a horrible day in the market? Is this a crash? I don't think so. The question is, where do we go from here? If we look at my daily briefing, which is running on one of my monitors during the day to give me all kinds of insight of what the markets are doing, what we've decided to do is not have it stream and use up bandwidth, but rather to refresh on demand. So it's after hours, so it's not going to have to refresh. But you could see the VIX was the only thing green, up 0.53. The spiders and the Qs, Bopsy twins, were both down 0.42, and their close relatives, the Russell and the Diamonds, were down more than twice that, 0.96. If we look in the closing range, you could see all over the place, but the spiders and the Qs closed near the upper part and the VIX, the lower part. Down here, we can look and see what was moving for the one day. And you could see that the leadership was energy, real estate, and healthcare. What was the big laggard on the session? Financials, discretionary, industrials, communication. It's hard to have the markets move up when the leadership that we've had, the tech leadership, the growth leadership, is sitting on the bottom. This was a rotation day, I believe, into some of the more defensive parts of the market. When we look at my themes here, a list of different themes: cannabis, copper, data centers, China, gold, silver, lithium, China, renewable energy, growth as a theme, autonomous vehicles. That's where some of the leadership is. And I like to look at that during the market session so I can see both not only what is leading or what's up, but what's leading and what's lagging on the different themes. Up at the top are the new highs and new lows at the various time frames of the NYSE and the NASDAQ, and they have gone negative, so that is a concern. In my experience, bull markets are built on new highs, not new lows. A lot of people are familiar with how Sager did such a wonderful job, does a wonderful job of looking at the S&P 1500, how many sectors are up, what percent, how many industry groups, and you could see 27% of the S&P 1500 and 33% of the S&P 1500 industry, so sectors and industries are up. Those are low. Only 36% of the S&P 1500 advanced, and most of the stocks are below the midline. So the S&P 1500 looked pretty bearish. I've added the NASDAQ. You could see no sectors were positive on the NASDAQ. Only 27% of the industries were positive, 32% of the stocks advanced, and most stocks are below the midline. A bearish day on the NASDAQ. And the NYSE, 17% of the sectors were up, 32% of the industry groups, and 40% of the stocks. So when in the major indices, more stocks are down than up. In most sectors and industries are not participating. It's not a strong session in the market. The buckets is a way of looking at how extended to the downside or upside a market is. As the stocks get weaker, I call it a shift to the left. When the stocks get stronger, I call it a shift to the right. But what I really focus on are the number of stocks or percentage of stocks above or below the Bollinger Bands. And what we've done here is we've gone beyond the S&P 1500, and we're looking at the four major indexes here, or four major index. So if I just leave it at that, you could see we went from 8 to 10% of the stocks below on the NYSE, from 9 to 11% below on the S&P 1500, from 9 to 12% below on the Russell 2000, and from 7 to 10% below on the NASDAQ. As you can see, there's more stocks that are in the left to the left, and you'll notice that those gray bars are high on the right, which is where we were a day ago. So we shifted to the left. We're starting to build up the number of positions that are below the Bollinger Bands, but by no means are we at a level that I consider actionable or a signal. We can get much lower than we are. On the market breadth, I like to look and see if we have any new signals. On the left will be the NYSE. On the right will be the NASDAQ. And this is done on weekly charts, or daily charts, my bad. We have set for weekly as well. You could see the NYSE did a pretty significant pullback in December to the 200. But when you look over on the other side, you really didn't see that much of a breakdown. The NASDAQ has certainly been leading, and first of all, they're both well above their 50, which is bullish. Second, even though they both were down with red candles, there's big tails on both of them, which shows me the recovery after the initial sell-off. Down here, when I look at stocks above the 17 in green, 200 in red, 50 in white, they're kind of basing right at 50-50 on both of these. When we're oversold, we're going to get down here. And when we're overbought, we're up here. So that's neutral. You'll notice that all except for this one here, new high, new lows on the day was 6%, six greater new highs than new lows on the NYSE. If we look at the AD line, negative, and up-down volume, negative on the NYSE, and all three, including new high, new lows, are negative on the NASDAQ. No new singles down here. We're looking for Hindenburg omens, which are the triangles, bangos, which are the X's, bingos, which is baby out with the bathwater days, which are the green pluses. These are eurekas, which are exuberance to the upside. These are phoenixes. And someday you'll get to see the CPR, not the CPR, the defib signal, which is how you resuscitate a dead market. When you see one, it's buy, 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 but you have to sell off hard to see one of those. So nothing new here. And then on the ratio charts, I think it's going to emphasize the defensive nature of the market. And what we're looking here is, forget the upper left, which is Bitcoin versus the spider. When they populate in a moment, the rest will be the sector ETFs versus the spiders. And you can see staples have come up, utilities have come back up, real estate's moving up, healthcare's moving up. Those are all defensive. Communication still over the long run is doing fine, but it's come back of late, as have financials. Discretionary has sold off considerably. Industrials have sold off, and technology has held up relatively well. So the first 17 minutes of my analysis is to get a sense of what I think the market is doing. And I think the market is at a point where some further softness, in my opinion, is likely, not guaranteed. Still in a very news-driven market. Markets do like to climb a wall of worry, but I'm not sure we're done going up. It would not surprise me to see us pull back a few percent to that first level of support. Now, for finding stocks, you can approach the markets from a top down, which means what's the best sector, best industry groups, and the best stock, or from a bottoms up, which frankly is much more fun, and looking at all the market and find the shiny new toys. I like top down. So let's go to the top down. And you notice that I have a number of sectors and a number of industry groups. And so there are different things that I might do. What the percentage? One sec. There we go. What I've done is I've ranked them by percentage return. You could see the only positive percentage were real estate and energy, and then we'll look at healthcare as well. So it's real estate, energy, and healthcare. So those added up, just real estate, energy, and healthcare, added up to 1,080 stocks. So how would I then ferret out which are the best of those? Well, I could do a couple of things. I could filter them and take out things I won't trade. How about above the 200, volume greater than 500, price greater than 5? And I get the list down to 244. And then let's rank them by short-term momentum and see what comes to the top. Pen Ubra, PEN, was one that I looked at over the weekend. And you could see after a big gap up, it went nowhere on Thursday, considering it was a down market. It's a little bit extended. Repligen, RGEN, sort of a sideways move after a sell-off. Bristol Biotech, this one I'm a little bit more interested. Let's look at what the weekly looks like. Let's look at the monthly. So this is an IPO, and it had a breakout above the 200. You could see that it had breakout on volume, relative strength and OBV look good, and it's not extended. So I might add that to a hot list. ONC, Beijing, this is a great company. It is not an IPO, even though it looked like it didn't have a lot of data. They just changed their name. So the data should be there. It is. So this is Beijing, and I think I'm going to have to talk to Praveen and make sure that we fix the symbol because it's not showing the old data correctly. But Beijing, see where we're at. Nice little breakout here on good volume. Now did earnings come out? I can clip up here and it should populate. But being that this is a new name change, it doesn't. I'm not surprised. And I could go through Vertex, was one I talked about over the weekend. This one's making a big run. It's run from less than 400 up to 480. Lung, small stock, cheap stock, big breakout. This one looks interesting. So from a top-down perspective, I might find the top 3 industry groups and just see what comes to the top. I could also come over here, and let's again rank by short-term momentum, not by percent change today. And let's just take the top 5. I'll make it 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. And so now we have the 10 groups. And again, I'm filtering above the 200, greater than 500,000 shares, and greater than $5. And here's that Repligen again. And I could start going down the list looking for something that looks good. Lily, I talked about yesterday that I thought this was one that was likely to go higher. AbbVie, breaking out. This one is like a biotech stock that pays a dividend. So it thinks it's a biotech, but it behaves like a big pharma. And what you could see here is a dividend 6.29%, or $6.29 rather, which is, I guess, 0.88%, must be 0.88% a quarter. And you could see here earnings, changes, surprises, etc. Next earnings date is 4/25. So AbbVie looks interesting to me. Another thing I can do is bottoms up. And again, bottoms up is more fun. So let's kill all my filters here. And let's go up to the impulse level. And my favorite scan, and people that have been here and following me knows that I want to look at above the 200, volume greater than 500, price greater than 5. And let's see if we've got any that have my special 2-day momentum signal. And I've got 2. Both of them are relatively cheap. LBYTK, Liberty Global. Big uptrend, pull back to the 200, major bounce. What I don't like about this stock is that its 50 is heading down and it's going to be resistance. So that's something I have to be concerned about. The 17, it blew through in the market. Let's look at earnings. Earnings came out 218. Massive dollars. Why it says minus 260%, I'm going to have to talk to Praveen. These look kind of wonky on these earnings. So I'll check that. We're just pulling them in from a data feed, but I like the move. Breakout momentum, recent squeeze, relative strength looks like it's above, as is OBV. So that's one I'd rather buy it breaking above the 50. And then the other is QBTS, which is quantum computing. These are all, this whole group I think is very early. Um, but this is one that pulled back and had a big move. It's the EMS is signaled, the CPR is signaled, volume, two momentums in a row, relative strength and OBV look good. Why do I like this scan? Because the scan has been working for me. I have a couple of other signals that I like. I can look for a multi-time frame CPR buy. That's one of my moving average crossover signals. And boy, those who've been following me for a while, we talked about Axosome multiple times when it was a heck of a lot cheaper. The only thing that's different is I thought it was a takeover candidate. It continues to run. But notice this blue dot here. That tells me it's had a new CPR signal. And this model requires it to also have a blue dot on the weekly. So what it's going to find are stocks that are in a longer term uptrend that just had a trend reversal in the shorter term. If we rank these by short-term momentum, because there's so many, Mealy had earnings, and Mealy looks like it wants to go to the moon. Earnings came out 220 up. Let's see, the change was 0.51%. Look at the revenue surprise and the revenue change. I think that's what's driving the excitement here. Um, Lung was one that's now hit us on a couple of scans. So lung, again, might be something to look at. Try, Thomson Reuters. We looked at Lilly before. Insulet is one that looks interesting. Big uptrend, pull back to the 50 and a breakout, not extended. And healthcare is looking good right here. These are one of the ones that may do well during a rotation into defensive. This Cardinal, it's right now it's going sideways. This is one that if you look at over a longer period of time, sort of has a picture that's hard not to love. So at some point, McKesson might become interesting as well. McKesson, Cardinal, and Cencora are the three big distributors, and I've sold two companies to Cencora and one to Cardinal. Never sold one to McKesson, but I like the stock. So caution in the market. There are some things that are working. We looked at quite a few of them. Hope you like my new toy here. Beta testers, next time you load it up, you're going to see a new version. Those that are not beta testers, we'll have something to talk about over the weekend. Have a great day on Friday. Remember, it's options expiration.